Good morning, everybody. This is Nicholas Teo from CMC Markets here in Singapore. A few things. Overnight, we saw very big moves on the euro dollar. That was spurred on by a couple of things. One, we saw on the US side, housing starts came in at a much hotter number than was expected, both on housing starts we see here and also in the building permits that were sort of announced over for the previous months. Now, what this happened as a result of what happened, we saw a very strong US dollar or the dollar index tick up, and most of the other pairs, the Aussie dollar, the CAD dollar, and also the euro dollar sort of tanking. The euro dollar in particular was hit quite hard because we also had news coming up from the ECB that they would probably speed up with their QE program in the earlier part of spring versus the front load rather than keeping it in the back end. So this caused a big move, and the last 2 days we have seen actually the US or rather the euro dollar lose as much as a high of around 114.5 all the way down to now testing its 20-day moving average, maybe hovering here for a little while before pushing on further, either on the downside or potentially rebounding off this line. But essentially quite big moves the last 2 days where the currency is concerned. This morning we saw the Bank of Japan announce their GDP numbers. It came in very hot, a good number, both from a Q-on-Q and also from an annualized year-on-year basis, from a quarterly year-on-year basis. The number came in at 2.4%. This compares to a read, or rather a forecast of around 1.5%. But importantly, this was also much higher than what was reported before in the previous month. That was also shown to be revised from a 1.1% level. Now, this actually sets things off for the Japan 225 or the Nikkei 225 that most people follow. Essentially, we are seeing this index actually test its near high again. This high of 2250 is actually quite an important level. The Nikkei as a whole, or the N225, the Japan 225 as a whole, has actually consolidated at a very high level from this big move that we've seen since last summer, really. Now, this level of 2250 again, if it's breached with momentum, we could see this thing push higher to around the 21,500 level once more. If not, it will probably fall back to test around again the 19,000 level. Whether it has the guts and the spirit to actually go will depend on several things. One, whether the traction in the economy down there will continue to grow and consumption will probably kick in. But importantly, a lot of the Japanese corporates have announced very strong results of late. They have benefited largely from a weaker yen, and that's probably going to see them continually report higher profits going forward, and that's going to probably bring interest back into the Japanese stock markets once more. Certainly something that we are keen on, and it's something that we are looking to follow further. I mean, besides that, we saw this big move from the Chinese markets yesterday, and basically this green candle has essentially wiped out this series of red candles. The next days or the next couple of days of move will obviously be key in further direction. There's a lot of talk about a bubble-like situation going down there, but the Chinese market, for some of the bigger markets like Shanghai and the Hong Kong enterprise index, is not overly valued to that matter. But the liquidity rally that we've seen is certainly causing a little bit of concerns for the domestic regulators. Finally, just one last thing I want to squeeze in: the SPX, or rather the S&P index. We have seen this actually punching through its high, and what's interesting down here to note is that after breaking above its high, it's actually failed to sort of achieve that, or failed to follow through. In fact, this indicator down here could represent or may represent some sort of a false break. And if that's the case, it will probably fall back into this comfort zone that it's been trading at for the last 3 months or so. Something they were watching again. We wrote something about it in the daily today. Please look up for it in our insights. Thank you.